We are going to do detailed practice on this chart to understand extended monthly with no event on the LHS in terms of the moving average. And within that, we will understand the daily time frame within a weekly STF. In this scenario where the monthly is extended and there is no event on the LHS in terms of the moving averages, as you can see it here. The video is going to be detailed, so let's start. First of all, when you begin your practice work on any chart. So this is the agenda. I saw the daily time frame of this one, okay, and then I switched to the weeklies and the monthly. Our job is to first identify the area that we are going to practice upon. So for this video, what I am doing is I need to understand, is there a way we could have traded this move, right? So this becomes the focus that, okay, how will I trade this move? Now, this is the agenda for practice, and keeping that in mind, we'll do all the practice. And this is how you should as well progress. So, I'll get this off from here. So, our basic agenda is basically this monthly candle, if I see on the monthly time frame. So, the time frames you are going to use is going to be monthly, weekly, daily, and hourly. Okay, I saw that the daily was like this, and within that, the monthly is this. Okay, so now let's start with our note taking. So let's say you see the daily and you take a judgment on the DNA first. That's the first thing that has to, be done. So over here, 9, 10, 8, 8. So basically, it usually on the good days when the circuit limit was revised, it was going up 8 to 10%, right? And the DNA seems pretty good, I would say. Pretty close to being excellent. So you can slot it somewhere between good to excellent. I'll just mention over here. So first point, as we have seen, will always be of the DNA, and the DNA is good to excellent. You can use anything for this. And if I see the structure, well, on the daily, it's pretty evident we are in a good uptrend. You can clearly see the structure here. So the structure here becomes uptrend. We are clear on that. There is no range or anything as such. So the structure is good. And if I talk even about the stages, right? The stage is stage number 2. Okay. That's very clear as per the moving average and how things are lined up. So this is, the basic. Now, you may question, why is the DNA good and excellent? I mean, just have a look when the stock is going up. How is it going up? Have a look at the candles, the open and the lows, the highs and the close. Pretty good whenever it is moving up, right? I mean, when the stock is in 5% circuit, there is not much stock can do. But whenever it is allowed freely to move, just have a look how these dark blue candles are there, and look the volume clusters. It's it's pretty brilliant if you see. And I believe there is a lot to be practiced in this chart, which I will do it for you in the times to come. So that is why the DNA is good and excellent, the structure is uptrend, and the stage is 2. So now I'll just mention what exactly is the DNA. So what I'm seeing is, since the 10% is the circuit limit, we are seeing 8 to 10% moves in a single candle, right? In a single candle. And usually what you're getting is you are getting a couple of candles, blue candles, which is usually your 10%. So in a single up move, you're getting somewhere around 20%. Okay. That's what I know. When I say somewhere around 20%, it can be 17, 18, or 22. But you get the point. It's not 13. It's not 6. It's not 29 or 34. It's around 20. That's the whole point. And when you see the quality of the consolidation, well, if I see the consolidation, it's not that great. It's just okay. It's okay. Just fine. Just okay contraction. How we are getting it. It's a little bit volatile. Volatile candles, not many, just a few, right? That's the observation regarding our contractions, and that makes it Okay, I like the good up moves DNA. And the structure is clearly uptrend, the stages too. So these are the important points that we are concerned with that you have to see whenever you're planning a trade. Now, once we are done with this, I'll just keep it over here. And now, what are we seeing? We are seeing that the 10 moving average is intermingle with your 20, right? It's wrapping around 20. While 20 has always stayed above 50, the 200 is sloping up. Okay. So now with this, we have done the basic work that had to be done. Now let's begin the practice and putting everything on the time frames. So I'll just cut it for now and get it back when it is needed. Now what you will do is you will then switch to the monthly. Okay. Interesting. This is how the monthly looks with the moving averages. So I can zoom out and I can clearly see we are in the all-time highs. Okay, and if you see the DN of the monthly, now there was a single month where the candle basically gave you 100% move. After that, what has happened regularly? 30% here, 24, 27, 47 here, 36 here, 45 here. So you are getting somewhere around 30 to 40. That is the number where a single monthly candle is going. Obviously, the context is very important because if you see where this 100% candle is, it's very different than this candle. So obviously, it's 100%. And where this candle is happening is entirely different from all these candles. So that has to be kept in mind. But you get a point, right? 25, 40% is what you can get depending on what is happening, where is the contraction happening, what kind of contraction that is. We are interested over here, so I'll get rid of it. It's not necessary. So let's make the basic observations. First thing is we are into the all time highs. So that's an important observation that you have to be aware of. And there is no, which means, I mean, usually there is no resistance on the LHS on monthly, right? There is no major resistance, which was over here at this point of time, which is not now in this scenario. And if I talk about the DNA, it's usually 25% to 40% in a single candle, right? And a single up move will is somewhere around 20 and 30, 50, 50 and 30, 60, 60 and 50, 100, 136, right? So the moves in a single move, single up move is what? 100% plus or something. But as I said, but the context is important. So don't forget about that. Some people do this mistake. They just use this calculation, expect the same thing to happen again. You have to understand the cycle as well, the horizontals and the vertical cycles. Anyways, now we are done with that. What we will do is we'll mark because we were somewhere here when this candle was not formed. When we are looking to trade this entire move, we would have certainly, you know, wished to buy the stock somewhere here. This is the area. So how the monthly would be looking like? Monthly would be looking like an inside candle somewhere here. That's about it. So what observations will you make then? That is what we are doing. So what I'll obviously do is the first thing is I'll mark this level. This is a level of importance, and this is kind of a resistance we have. Now just have a look at few important parameters. Just scale it correctly. So I think this is the appropriate scale because we are not really concerned with any of this. Why? Because they are not posing any resistance, and whatever they had to give us, we have already taken it over here. So I'll just zoom in to a good appropriate scale so that we get good enough space as well to write things. Now have a look at the quality of the candle. It's pretty good. The DNA is close to being excellent, and just have a look at the quality of the consolidation. So that point has to be noted here as well. DNA quality is good to excellent here as well. Contractions are clean, right? They're pretty clean, pretty less volatility. And that's a good thing. That's what you want to see, especially when you are at the monthlies. If your monthlies are volatile, it becomes a difficult trade to be taken. Now, once we have done that, there are few important things that you need to observe over here in this area. So, first thing, when I'm sitting over here, the first observation that I'll make is no event in terms of moving average cross on left hand side. That's true, right? This is a really, really important observation. Okay. And you have been going up for a good period of time. You haven't even closed below 10 moving average. So, this is something that you have to keep in mind. And then the move that you got was from here. Basically, 45% move is what you got. And for that, you had a contraction of four candles. Pretty appropriate from the scale of monthly over here. Now, the important point is expansion, expansion ended here. I'll mark the arrow. So, the last good candle in the expansion was what? The last good candle, right? I'm not talking about where it ended, but this is the last good candle. In fact, this is the candle of the expansion, and kind of the expansion ended with this one. Okay. And this is the last good candle, and the expansion ended the next candle. And the candle with which the expansion ended, you have to note it. The candle with which expansion ended, I mess up this at times. Expansion ended is where contraction started and stayed within. This is one of the most important points that I always talk about, is that this is the candle where you can say, it stopped expanding and everything that happened in the contraction stayed within this. Yes, there is a little bit. If you see the high of this, it's a 1997.70, goes up just a little bit, but that's about it. Everything else has stayed within the contraction from where it started. This is one of the most important points. If you remember the last video, which is about two important candlestick patterns, you will see that happening over here on the weekly when I'll show it to you. So, this is a really key point that you have to understand. This entire contraction you see happening was within where the contraction started. Really important. And everything was in the upper half of the contraction. That adds to the deep versus shallow debate of the contractions. So this is a good thing, and I think this is the largely point that you have to see. You are away from the 10 moving average, so that is over there. Now, observation is we are away from 10 EMA. If you see, you did not even touch the 10 EMA on the monthly, right? So there is a question: how do I know that it will not come to the 10 moving average of the monthly and then move up? Now, that's something for you to think about. How do you know? That's important. So think about it. We are away from 10 EMA on monthly. So this is largely the observations we could take away from the monthly. Now the question is, can monthly be my STF? I will say it's advisable that yes, there is an up move, small up move. The DNA is good and all that. The contraction is good. But when you say I want to keep monthly as my STF, what you're also saying is you want to have similar level of patience and you're expecting similar kind of moves, which is somewhere here. But just have a look at the overall context of the monthly. There is no event on the left hand side on the monthly. You are away from the 10 EMA on the monthly. Certainly, you can get a move around this area, but that may be it. You might not get this, which you probably would be hoping for in the case of a monthly STF. And if you're taking a monthly STF trade, I would say take that trade when something like this is visible can happen on the charts, not when this. So, what to do in this case? The best thing to do is okay, uh, take a note of all these things. Now, because there is no event in terms of the moving average cross on the left hand side and all these things, say that okay, the monthly has all these points, but I would rather trade this thing through something else. Now, that something else can be your weekly or daily. That would be better, and that's the best way. In these cases, in the cases where there's no event on the left hand side on in terms of moving average, and you're in the all-time highs, extended monthly, basically. So this is exactly what you have to do, and that's what we will do. So I'll just download this monthly chart and see you on the weekly time frame of this one. Now we are on the weekly chart. And if you have recently watched the last video that I published, which is basically two important candlestick patterns, you'll start observing something over here, which obviously I'll talk in detail in just a bit. So now this is how whatever you are looking on the monthly is looking on the weekly, right? So we have an up move here, we have a contraction, and then we are moving up. Now just have a look. With this candle, your expansion basically ended because this is the last high that was made. And then you basically went into a contraction. You just went a little bit up. That's nothing of a concern. This is all right. And from here onwards, the up move started. Now let's first have a look at the DNA and the quality of this on your weekly as well. So, yeah, I mean, if you just lay your eyes over here, how much is this? 15%. This is 20. This is 10 again. This is 10. So 15, 20, and 10, we have three numbers right now. This is again 20, this is 17, this is 28 over here, this is 37. Now, this also happens largely. Why? Because over here, uh, most probably the stock was in the upper circuit limits, right? So that's the upper limit even of the weeklies. And over here, you did not have those circuit limits. So certainly, these percentage differences will be there. But usually it's really good, right? It's really good. From here, I'll take, since this is where you were not in the circuits, this is 11, 11. So I'll make it 20%, 20% here as well, and 15%. So somewhere between 15 to 20% is what I'll get, single week. Okay. And if you see the DNA, the candle quality, it's pretty amazing. It's again between good to excellent. Anytime you see the up move that has happened, it's pretty good, especially when you're going up, not in the range or anywhere else. But when you're going up and the expansion was over there, the candle quality has been pretty fantastic. So the DNA on the weekly will be labeled. You can call it excellent, you can call it good, everything would be just fine. So that's the important point we will get here is your DNA. It's good to excellent. And what are the moves that we are getting? We were getting between 15 to 20% in a single week. And how much are we getting uh, in the entire up move? With that calculation, you can either take from the monthly, it will come pretty close to that number. If you take 15 and 20 here, that is your 35, 35, and again 20, it's again 55% move in this entire up move you had. But do keep in mind about the context of how things are happening, where they are happening, right? This is different, and this will be different than these. Okay, so these are the important points. And when we talk about the structure here, it's uptrend. And when I talk about the stage two, that's given, right? If I plug in the moving averages, that will be pretty evident. Okay, now we can get rid of all these things and we can appropriately scale our chart. Yeah, I think this is good enough. This is good enough because we are focusing over here. So I'll get it here. And great, now we can focus on this, labeling everything, and I'll also get in the moving averages. Now, this is how the chart looks. Interesting. Now, let's start with the observations, the things, that you will think about when you are watching the chart. That is important to write down. You don't have to write the facts, you have to write down what you're thinking, what is going on in your mind. So, we see uh, the expansion was there, and I would say expansion was pretty good till this point, till this candle, this blue one. The expansion was pretty good if you see. I'll get rid of the move the magnet in it. Okay, now the expansion was good till this point, after which you had a decent contraction. And then the expansion that you had, if you see, this is a weak expansion, you see. This is not what you want to see, and because of which, you get this volatility and things happening, right? And then you had what? A weak expansion. So you can take a note of this as well. And this is where the contraction started, right? So the contraction started with what? With a candle having high volumes and not being able to sustain at this price. That's important. So I'll note this candle because this is really important. And now, what happened? There is again no event on the LHS. That's an important point. We cannot miss. There is no event on the LHS on the weekly. So, certainly, we have to take a note of this. No event on LHS on the weekly chart. Okay. After which, what happened at this point, never say the price should or will come to its 20 moving average or 50 or any other moving average that you're using. That is not the way. All I can say is I'm not going to trade it at 10 moving average. You get that point? When I say I'm not going to trade it at 10 moving average, I mean M10. I'm not going to take M10 in this one. The reason? No event on the LHS on the weekly. And the expansion, the kind of expansion you had, the way the contraction started, it's not an M10. So don't do that. Now, once we are clear on that, after this, what happened? Will you look to buy her? Certainly not. Especially when I'm treating the weekly as STF as of now. Then what happens? Then take a note of this candle, this one over here. What does it do? This candle closes pretty well. This candle closes pretty well in this territory. In the territory where the contraction started with the candle having high volumes. And then now you have a candle which closes pretty well in the in this area. So point to be noted and on high volumes. So that is good. Now this gets me interested in the stock, right? This gets me this gets me in the stock. No, not in the sense buying the stock, but now I'm looking at the stock. At this point, the best thing will be if we get a contraction. Now you will ask, why will you not buy her? Why will you not buy her? See, if I'm buying at this point near the closing of this week, what will be the SL level? Even if you're buying on this candle, let's say, somebody will say, uh, in fact, I'll talk about this in sidebar later, but let's talk about this one. You say, why can we not buy over here? What's the problem? The problem, well, there's no problem as such. It all depends. Uh, but you see, if I'm buying here, my SL will be around 17%. And do note the analysis we did on the monthly. The move you're getting is between 25 to 40% in a single month, right? For that, taking the SL of 17%, that's not the best thing. I mean, you can take a 17% SL if you're aiming for a 500% move, even 100% move, but certainly not when you're looking at 30% or 35%. That's 2 is to 1. Not bad, but not ideal. Certainly not. So that's one thing. And that is why we will not buy here. You can buy if you're fine with this, but with very little quantity. And that is why, the best thing is you get a contraction because a contraction will only help you. Some people, are afraid that, oh, the prices are coming down. What will happen? Well, the prices are coming down so that you can have a good buying price. Your SL will be small. Your position size will be good number, not 25%, not 30% of the capital. 60, 70, 80% of the capital. That's where the money is made. So you can have that with confidence, and you can juice out the maximum of the up move that the time frames have to offer. Right. So that is the observation on this blue candle. Now we'll take the observation on this inside bar, because I would say a lot of people probably would have been interested over here and probably would have bought by the closing, and only to see their stop loss getting hit, because they probably would have hit the stop loss here. Now I have a question. If you are trading this inside candle or anything as such, why would you have the inside bars candle low as your SL? What is the reason? And when I ask you this, a lot of people won't even have a logical explanation. All they'll say, I trade on small SLs or tight SLs or whatever. But is that all about it? Is that it? You see, there's the vacuum. You just don't know. And the question is, if you're buying here, there is no point of having your SL below this low, because you need to have your SL below some certain demand area, which is marked by the low of this candle. So a little below this. And that is why if you're buying here, well, you can buy. Uh, but certainly this is not the best price. And you are also away from the moving average, the 10 moving average. So again, uh, not very ideal. Now let's move ahead and see. Then the very next week, you had 11% down candle coming from this region only, but the volumes are drastically low. The volumes are drastically low here. So you will take note of this. Or red candle, I mean, it's clearly visible. It's distinguishable. That's a red candle, different kind of red candle, but with low volumes this time, coming from the same region where the contraction started, and closes at or slightly below 10 moving average. And also brings us close to the low of the blue candle. And that is a good thing. Now just have a look, just look at the quality of this candle, and then only this point is relevant. So that's important for you to acknowledge over here. You just cannot blindly make it a pattern or a formula. And I hope you get the sarcasm in the last video I gave you. Two candlestick patterns. Some people missed out, unfortunately. And now, after this, you again have a candle which is 10% up on low volumes and closes above the 10 EMA. Now, that makes things very interesting. Next candle closes above 10 EMA, but it doesn't take you far away from 10 EMA. You get my point? Which the previous candle did, which the last blue candle did. If you see, this is where the 10 is, and this is where you're closing. This is where the 10 is, and this is where you're closing. So you closed above 10 EMA. The candle is good, and you're also near to the 10 moving average. Now, in this case, if you, let's say, buy at the closing, your SL is 11 to 12%. From, in this case, 17%. And that's a good thing. That is your VCC happening. But will you buy here? Well, you can if this SL is fine for you. But you see, there is a better buy point, which was on this red candle with the SL below this level, which brings you your 17% SL to 8%, cuts literally in half, which means the position size is doubled up, which was over here. So either you buy here, but please take note of this candle. Only then this point is valid. So this happens to be the first buy point you can have. Let's say you are saying, okay, I don't like the candle. I would actually wait for some more time. That's still fine. So I'll just put this point here, get rid of this, and then analyze that. Okay, now this has happened. Now you will wait for the contraction. Okay, just have a look at the contraction that followed. Small candles. Small body candles, less volatility happening over here. Closing right above 10 EMA. Right, that's a valid point we have here. So this is important that you take a note of. And everything is happening within this high. That is important. And if you recall, this is exactly the candlestick pattern that we discussed. And this was the point that I gave you reason and logic why exactly this is a good thing and should happen. So do watch that. There is a detailed explanation over there. So small body candles, less volatility, closing right above the 10 moving average over here. Now just imagine you probably buy over here in this candle. What will be the SL? 8%. 8% SL for a move of 25 to 40%. So somewhere around you're getting 3 or 4 is to 1 risk reward, right? If everything goes in your favor. And I think that would be a good thing. And let's just say you take this trade with 8% stop loss and you buy here, and potentially you got a 45% mover for an SL of 7%. That is a risk reward of 6 is to 1, right? Potentially you probably would make 4 is to 1 out of it. Is that bad? I don't think so. I certainly don't think so. That's a bad deal. And that is how things work. If this is the way you go, I mean, you will do pretty well. I mean, can this SL be made a little better? Certainly. But right now, we are dealing with weekly as my STF, right? And I'm not even using daily to fine tune my entry, which I will do. So right now, the weekly is STF and also my ETF over here. If you don't know what is STF and ETF, there's a PDF on my Rich Road Telegram public. Go through that. I've explained over there, and you'll get the point. What exactly STF and ETF is? It's basically the setup time frame and the execution time frame. And this is all exclusive to Rich Road. If you have heard it somewhere else, you know it, then where it has come from. But anyways, that happens. But just see, all this arrangement is happening within the high of this. And this is one of the most important points that I'll ever give you in your trading. And that is then, you get this entire up move. So now see, this buy point brings your SL closer and also brings your waiting time much less. You are able to time the entry uh, to as close to perfection. There is no perfection, but you're this close. If you're buying over here, certainly you're accepting the patience that is required. But when you're buying here, well, you get a better SL and you don't have to be that patient. And then you have the move. So I think this is, the analysis of the weekly. It's looking a little clustered, so I'll just get it a little far away. And you should also do it if things look a bit clumsy over here or too together, then just bring things a little apart. And now we are looking much better here. So this is about the weekly as STF and the ETF. Now what we will do is we will see that, okay, if I'm scanning on the weekly, but I want to fine tune the entries on the daily and use daily as my STF, or if I'm scanning through the daily, what will happen and how daily time frame will help us over here. Now we are at the daily, and I think this is where the big work will start for us. So let's begin with this, and as we did earlier, we'll just paste of the observations we made on the daily in the beginning of the chart. And let's see how the scanning will help, where we will get this stock, and how to deal with this. So we have done this part already, right? You can probably just go back and refresh how we did this on the daily, and then resume from here. I've given using the timestamps. But now let's see uh, where this stock will come. Let's say the stock is over here; it will never come in your scan, any of the scan. And then let's say once this move has happened, now it will come in your scan. Okay, now let's talk about the thoughts you may have when you are on the daily at this point of time. You will say that, okay, sir, see, uh, you are near a resistance The event of 10 moving average above 20, there is a event happening on the left hand side. The CBs are amazing, the volumes are good. So I'll just start buying the stock here, only for the stock to do what? This. That's a little problematic, right? So what happened there? Why did this happen? Oh, let's go deep into this. I was thinking we'll have a different video, but anyway, let's just go for it. Now see what happened over here. Where did the expansion end? Did it end over here? Did it end over here? Or did it end over here? Exactly. Where you would have preferred the expansion to end? I would have preferred here, but even this was a good point. But what exactly this is? This is a 3.64 up move percentage in the contraction, which is not a contraction anymore because of this. And after this, what happens is, I can certainly tell you this is a structural point that has been made. And the candle, this one, which brings you closer to the 10 EMA, is actually breaking a structure. And if you see this on the hourly, you'll see it clearly. I can tell you it's a structural point that has been broken. Did I not tell you? Just by looking at the daily, did I not tell you it's a structural point which is visible? And because of this, it has been broken by quite a margin. If this is fine, this is certainly not. And even if you say, I mean, stir still, you just went down, but you came up a little bit up and just closed above it. So I guess that's fine. Okay. But just have a look how things are happening over here. This is not what you want. And that is why it did not work over there. It did not give you a move from here. And this was also, if you see, this is the Friday, right? 18th October. And I'm pretty sure this is the inside bar that we had on weekly, which we were talking about. And this was the bad red candle on the weekly we saw. But this put things into a lot of sense, you see. This is the week, 14th to 18th October, I believe. And then this is the from 21st October. And then the next week. Now, if you will again revisit whatever I said for the weekly in the weekly discussion, you will make more sense of what happened over here on the daily, and you will be able to understand it better, right? Instead of just looking at this daily and saying, okay, I'll buy this because we have an inside bar over here, we have a demand candle over here, and that's about it. No, it doesn't work that way. It's not that simple, not that straightforward. But I hope you get this point. And then what happened is that bad red candle on the weekly simply got to daily to the 50 moving average in the presence of such amazing candles, and even on the left hand side. Now, this becomes a V25 here on the daily. Okay, so this was your first entry point, if you remember, right? And let's say you enter on this day, okay? What will be the SL? 7.7% will be the SL, right? Okay, that's good. This will be the third entry point over here. So, same thing is happening. Will you enter over here? Probably not. Will you enter over here? You can enter over here with the SL, the low of this red one. So, in this case, the SL again comes around what? Similar, 7% here, 8% here. Okay. And then probably you can use this entire area to enter the stock. And then what you had is what is amazing and the best place to take the entry and take a close attention over here. See this candle, 4.79%. The volumes are, I think, twice the average over here, which gets this in your scan. Now look at this. Where is this happening? Within the highs of these contractions. This is happening. And there is an event on the left hand side. Now the candle certainly is not the best that you will wish for, but then also see where is this candle taking you. It's taking you in the region from where even such good candles could not make the stock price go up. So certainly this is expected, right? If you remember this, there is a wick, but that's a good wick. But then what happened? You tried to move up, you came back down, and then you had a bad day on 3rd of December. It's a minus 5.5% day on really, really high volumes. Now, most of the people will say the market was bad. They'll give you 1,000 reasons for the stock to not work and all that. But this actually was a good day to take the trade. Why is it? Despite 3% or 5% down day, in the next few days you had these candles which could not, this candle could not even make 10 go below 20, and these candles made the 10 sloping up again. That's a huge thing. That's a huge thing. After an event, you have this candle, yet your price is at 50 moving average almost. Yet your 10 is above 20 moving average. That's a huge thing. And again, relativity and all those things are in check only then. So, again, not a formula here. Now, let's say you buy on this day, what will be the SL somewhere here? Now, your SL is reduced to a 4%, and you are going for a move of 25-40% with an SL of 4%. Certainly doesn't sound like a bad deal to me. True. And if I show you this 3.71% SL on the hourly, I'm pretty sure, this move will be at the hourly 200 with the hourly 20 moving average around 50. And there'll be consolidations happening at 200-day moving average. Sorry, 200 moving average of the hourly. So let's have a look over there as well. I mean, what did I tell you? 20 and 50 near to each other on the hourly. And the consolidation is happening at the hourly 200, and everything is happening within this. So do you really need to be afraid of this candle, or it's telling me something else? Well, this certainly tells me something else, right? So this is, the importance here. And also one more thing, one very important point that should be taken note of is how these moves have happened. See, first thing, if I take this arrow, we had three candles consecutive up move over here, right? You can see it over here. And then you went down. Nothing in between. Right from the 50 or below 50, straight just went up. Okay. Even over here, you had the same thing. You started here and you simply stopped here. That's about it. But what happened over here? It's a little different. You started here, much below 50. You went here and stopped. Then you went into a flat contraction consolidation for few days, 5 6 days, and then you had this move, because of which when the price came here there was a reason for you to give support, which was not over here. That is why you directly just came at 50 and then got the support. If let's say you had a zone here which built, let's say you had a good candle here and then you had a zone and then you went up, probably this would have worked. It would have been very different then. But this time you went up, you contracted a bit. Over here, you can see you contracted here, and then you went up. And then again, you came back down. This gives us support, this gives us a structural point. And you can see this uh, in action on the hourly. See, see, see yourself. I'll get rid of the moving averages, they are not helping us over here. Single up move, there is no structural point here. Single up move, no structural point here. Now compare this. There is clearly an up move and a flat consolidation, right, over here, and then an up move. And then this brings us, this red candle, this brings us to a structural point here. The last structural point is this, right? And you just get the price over here. Well, that was not the case here. I mean, why did we not take any support over here with this candle? There is no structural point over here. So the price simply just came down. The last point you had. Similar thing happens over here. You just came to the last point you had the support on. But in this case, you came to the last point of the support which you had, which was over here and not here. And that is why you got to move from here. And why you are getting this move, despite the markets being bad or whatever the reason may be, the monthlies and the weeklies and then the dailies. So now just imagine if you're on the daily or even if you're on the weekly, this becomes your first buy point. This area becomes the second buy point and this becomes the third buy point. Three buy points. This is something that is called as pyramiding. This is called as pyramiding. It's pyramiding is not if the position size is working in your favor or the stock is working on your favor, then only you keep adding. That's not the way. This is true sense of pyramiding. Let's say you add uh, just 10% of the capital size because of the stop loss. Over here, you let's say add 15 this time, and over here, so now combine these two, you have already 25% of the capital size. At this point, you add 30% more, or 40% more, or 50% more. This is how you build position size. This is how you build your exposure to the markets. And this is how you pyramid to the positions. It's not keep adding to the winners. That's not the way it should be done, honestly. But take it, whatever the people are preaching for God knows what reason. But if you see from a risk point of view and even rewards point of view, this is the right way to add to the positions. That is simply using your horizontal cycles. There is just no other way. True. Because these are the worst areas to add to your stock, to the winning positions, and these are the best ones. And this is how, you can use the daily uh, in the weekly STF to fine tune your entries, to add multiple positions, to get some more clarity over it. But then that's just about it. And if you're a daily trader, the only trade which you got cleanly was not here. This is not a clean trade of a daily, right? If you're trading here, then you are with the weekly STF only. You're just using the daily. Even if you are here, you're again using the daily. Because just imagine using this as the daily STF. You just don't have the patience, right? The scale. This was the only opportunity where you had a daily trade available for you. And if a daily trader got here, uh, he sided with the weekly's STF. And that is why, he potentially got to make, if you bought her, you potentially got your hands on a 40% move with a 4% SL. That gives you a potential 10 to 1 risk reward, out of which you will at least make 6 or 7, right? And that's still a good deal. So that is how, you have to practice. And although on the daily, I have not written a lot because, you can see there are a lot of things that can be written. But I would say, no, that is your assignment, that you again watch this video and uh, do these things, write down your observations on the daily and post it on the Twitter. You can tag my handle in the chart that you will post on your Twitter timeline, tagging me, and I'll see your chart over there. I can review it for you on the Twitter, right? So take this as an opportunity, take this as an assignment or homework, and do it. Do this practice. So I hope I've added a lot of value to your trading because we have discussed, an interesting case of the monthlies on the dailies. If you see the daily, right, if you plug in the moving averages, uh, it's a good trade to be taken and a lot of things to be analyzed. And that is why I always say, always keep the event on the LHS as a primary filter or criteria, right? Because that will usually give you or side you with the weekly STF most of the times. And when you don't have the event on the LHS, you will get the move, but again, not the best. I mean, just imagine buying the stock somewhere here, you have an event on the LHS and have a look at the move that you got. Pretty clean, pretty good. But just imagine buying over here. Yes, you get the move, but is it worth it? You get the move, but is it worth it looking here? Right? That's the point. I'll come back with the same chart, I believe. We'll again do on the weekly STF. Probably will select a different area. But you see, this is the way to practice. You first analyze or fix your area, that this is the area that will analyze, and then see everything around it, the TTF, the STF, and the ETFs. And in the next video, I'll actually use one more stock, which is, as of now, looking very similar to Zentech, but it is very different. And it starts with G. But, anyways, the point is, I will use RSI to teach you a lot of things, which the price at times may not help you to watch things clearly or, to have that clarity, which RSI will give you. So, in the next video, we'll do a comparison of this Zentech study that we did and the next talk that we will discuss.